Have you ever wondered about the unseen side of the housing market? A question that teases at the edges of the conventional wisdom surrounding real estate. Today, we'll pull back the curtain a bit and invite you into a lesser-known but equally significant realm of the housing market: the shadow inventory. So what exactly is this shadow inventory? To put it simply, it refers to real estate properties that are not actively on the market, but are likely to be sold in the future. These are properties hidden in the shadows, waiting for their turn in the spotlight, hence the name. Much like the name suggests, these properties are often shrouded in a bit of mystery. They're not listed on the multiple listing services, or MLS, which is the primary platform for selling homes. Instead, they lurk in the background, unseen by the average home buyer. You might be wondering, what kind of properties make up this elusive shadow inventory? Typically, these are distressed properties. They can include homes in foreclosure, those that are bank-owned but not yet listed for sale, or homes where owners are behind on their mortgage payments. They could also be properties where the owners are considering a short sale, where the home is sold for less than the outstanding mortgage. Now, you might be thinking, if these properties are distressed, why would I be interested? It's a fair question. But consider this: the shadow inventory represents a significant portion of the real estate market. And when these properties eventually hit the market, they have the potential to influence the average cost of homes. So, the shadow inventory isn't just an obscure corner of the housing market. It's a hidden force that could shape the future of real estate. And it's something every savvy home buyer should be aware of. Now, you might be wondering why these properties aren't being reported. Let's delve into that. So, why isn't the shadow inventory being reported in the mainstream news, you might ask? Well, the answer is layered, like an onion. And much like peeling an onion, it might bring tears to your eyes. The first layer is the potential to destabilize the market. Shadow inventory, these hidden homes not listed on the multiple listing service, represent a vast reservoir of properties. If they were to suddenly flood the market, it could lead to a significant drop in house prices. This isn't something the powers that be would want, as it could trigger a chain reaction leading to a housing market crash. Peel back another layer, and you'll find the legal complexities involved with distressed properties. Many homes in the shadow inventory are stuck in foreclosure limbo. They're tangled in the red tape of legal proceedings, and until these issues are resolved, they can't be listed for sale. Reporting on these properties would be like trying to predict the outcome of a legal case before it's even gone to court. Dig deeper, and you'll find that accurately tracking and reporting these properties is a Herculean task. The sheer effort required to keep tabs on all these homes, many of which are in various stages of foreclosure or disrepair, is immense. It's a murky world of paperwork and bureaucracy that many would prefer to avoid. Then there's the final layer, the bitter core of the matter. Shadow inventory can be seen as a sign of ongoing economic problems. It's a symptom of the wider issues in our housing market and economy. But highlighting this isn't in the interest of certain parties. After all, who wants to admit that the ship is taking on water? Understanding this, it becomes clear that the shadow inventory can have a significant impact on the housing market. It's a hidden force, lurking in the shadows, its true extent unknown. But one thing is for sure: when it steps into the light, it's going to make waves. So, as we move forward, let's keep our eyes open, peering into those shadows, ready for whatever they may reveal. Now, let's explore how the shadow inventory could potentially impact the housing market. Picture the housing market as a delicate scale, with supply on one side and demand on the other. When there's a balance, prices remain stable. But introduce a sudden influx of properties and that scale begins to tip. This is the potential effect of the shadow inventory. Imagine a wave of these hidden properties, currently absent from the multiple listing service, suddenly hitting the market. The supply side of the scale becomes heavier, and as basic economic principles dictate, an increase in supply without a corresponding rise in demand could lead to a decrease in prices. This might sound like a home buyer's dream, a sudden fall in house prices, but it's not necessarily all rosy. While lower prices may be beneficial for those looking to buy, they could spell trouble for homeowners who are looking to sell. A dip in property value could mean that homeowners end up selling their homes for less than they may have initially anticipated. And what about investors? For them, the impact of the shadow inventory is a double-edged sword. On one hand, a drop in prices could provide an opportunity to snap up properties at a bargain. On the other hand, if they are holding on to properties hoping for an increase in value, a price drop could lead to potential losses. However, it's important to remember that the impact of the shadow inventory isn't uniform. It can vary greatly depending on several factors, such as the location of the properties and their condition. A neighborhood might see a significant price drop if a large number of distressed properties hit the market, while another area might remain largely unaffected. In conclusion, the shadow inventory represents a significant yet hidden aspect of the housing market. It's like an iceberg with most of its bulk concealed beneath the surface, potentially influencing the market in ways we might not immediately see or understand. As we can see, the shadow inventory is a significant yet hidden aspect of the housing market. So, what does this mean for you as a potential home buyer? Let's take a moment and imagine. You're ready to make one of the most significant investments of your life. You've done your research, you've scanned through the listings on the MLS, and you think you have a good grasp on the housing market. But what if I told you there's more to the story? A hidden layer, a shadow inventory, that could significantly influence your decisions and the value of your investment. Understanding the shadow inventory isn't just about knowing there are more houses out there. It's about understanding that the housing market, like an iceberg, has a large portion that remains unseen beneath the surface. And just as an iceberg can cause a ship to change its course, the shadow inventory can cause shifts in the housing market, affecting prices and availability. When these unseen properties eventually come to light, they can increase supply, potentially driving down prices. If you're planning to buy, this could mean more options and possibly better deals. If you're planning to sell, it could mean more competition and potentially lower returns. Being aware of the shadow inventory could also help you spot trends and opportunities that others might miss. Perhaps there's a particular neighborhood with a large shadow inventory that's about to become the next hot market. Or maybe there's an oversupply of certain types of properties that could lead to bargains for savvy buyers. Remember, knowledge is power. The more informed you are about all aspects of the housing market, the seen and the unseen, the better prepared you'll be to make smart decisions. Whether you're buying your first home or your 10th, the shadow inventory is a factor you need to consider. In the end, the more you know, the better equipped you are to navigate the complexities of the housing market. So keep asking questions and keep exploring.